Now available on Tata Sky channel number 526.
Hello and welcome. You're watching Property Hotline with me, Kavita Krishnan. Today we are answering queries related to home finance with Harsh Roongta. Now, Harsh is a personal finance expert. He's also a SEBI registered investment advisor. Harsh, welcome to the show.
It's always a pleasure.
We've got SS Verma, Harsh, who's written in through email. Now, he says that he has an option of making part repayment of a loan, of his loan, and carry out a convergence. I believe that is conversion that he's trying to say, of 9.7% to 9.55%. What is the benefits? What is more beneficial, making a part payment first or going for the conversion first? What should he do?
So typically I think what he is referring to is this phenomenon of a floating rate at a higher rate getting converted into a floating rate at a lower rate. I think that, and for that typically the existing lender charges a fee. And it's typically 0.25% plus service tax, so roughly 0.29% of the outstanding principal. So obviously in his case, if he reduces the outstanding principal, if he has decided to do it any case, I am assuming that the prepayment is decided. If it is already decided, then you might as well make it first so that the outstanding principal will reduce, so that the fee payable on the conversion will also reduce. So I mean, this one is pretty simple. Make the part prepayment first and then convert.
First, reduce your principal amount that you are going to be left with. That is, prepay your loan first and then opt for the conversion. This way, you will also save on the fees that you would be paying on conversion, because the bank will charge you on a percentage. Will charge a percentage of your principal for the conversion, which is 0.29%, like Harsh said. So do the prepayment first and then go for the conversion. Also, Harsh, just break down conversion for our viewers, because it's not a term that we come across very often. When can one really opt for conversion in a home loan?
So I think conversion is a child of the very typical Indian phenomenon when floating rates in banks or any other type of lender only floats upward, they never float downwards. So when a customer wisens up, that is existing lender is charging him much more than what he is charging his own new customers, that's the time he goes to his lender and says, I'm going, otherwise you reduce my rate. And that's when the lender tells him, okay, pay me these fees and I will convert your earlier floating rate loan into a new floating rate loan. So that is
So basically, the bank will agree to treat you on par with the new borrowers when you go and approach them and tell them that, look, you've not really changed my home loan. You're still charging me the same rate of interest, though RBI has made funds cheaper for you. When you go and tell them this and you threaten that you will move on to another bank, that's when the bank offers you a better rate of interest.
Absolutely.
Right? But what is better then, converting within the same bank or moving to another bank? Because you are paying fees over here.
So typically what would happen is that the fee is 0.29%. If you move to another bank, typically the new bank, if you are a good customer, would waive all kinds of stuff, but there would be a 0.2% mortgage fee. Now that's a stamp duty fee that you will have to pay. Plus there is an administrative work that is involved. You have to get fresh NOCs and things like that. So if you're getting the same rate from your new lender, from your existing lender that you would anyways get from a new lender, then it's just plain simple, just pay the fee and convert.
So it's a cost benefit analysis that you need to do at the end of the day. We have Veshwan Verma who's called in now. Veshwan, tell us what's your question.
Good evening, ma'am. Good evening, sir.
Good evening.
Good evening.
We have booked a 2 BHK apartment in Hyderabad, ma'am. The 20% of the property amount we have paid by cash, and the remaining 80% we are going for a loan, that is bank loan through SBI. So in this case, my question is that the primary applicant is myself, aging 24, and my father is the co-applicant who is aging 50. So who will avail the tax benefits? Can both of them avail the tax benefits?
Vishwan, are you both owners in the flat?
Ma'am, actually we are planning to register the property in my mother and father's name.
in your mother's and father's name, but the home loan is in your name and your father's name. Am I right?
Yes, the primary applicant is myself and the co-applicant is my father.
So, Harsh, who gets the benefit of the tax deduction here?
So, I think first of all, Veshwan, if the property is going to be owned by your father and mother, they would have to be co-borrowers. Your mother cannot not be a co-borrower. She will also have to be a co-borrower along with you. So, you, your father and mother will be the co-borrowers. You will have to be a co-borrower simply because it is your income based on which the loan is being sanctioned. That's an assumption that I am making. Unfortunately, if you are not a co-owner in the property, just because you are a co-borrower will not entitle you to any tax benefits. You have to be an owner or co-owner in the property to get any kinds of tax benefit. The other issue also, Veshwan, that I must caution you is that if the property is under construction, no tax benefits are going to be available till the year in which the construction is complete. So, I mean, I don't know whether you are buying a ready property or an under construction property.
Vishwan, are you buying ready property or under construction?
The property is under construction, ma'am.
Property is under construction, in which case you will not be entitled to the tax deduction till you get possession of that house. And the tax deduction that you can claim for these initial years where you've paid the EMI, that can only be claimed in installments over the next 5 years after you get possession.
Ma'am, actually, if myself and my father both are being the owner and the co-owner, so in that case, who will avail the tax benefit?
See, Veshwan, what Harsh essentially was saying is, you have to be a co-owner to get the tax benefit. So, whoever owns the property gets tax benefits, right, Harsh?
Yeah, I think what now you just said, Veshwan, is that instead of your father and mother, you and your father would become co-owners, and in which case, both of you would be eligible for the tax benefits on home loan repayment as and when the property's construction is complete in the proportion in which you share the loan. So, the repayment would be done by you in a certain proportion. In that proportion, both of you can share. So, if you are, for example, if 100% of that loan is being borne by you, then you can claim 100% of the tax benefit. If 50% of the loan is yours and 50% is your father's, then both of you can claim equally on the home loan repayments. If the property is going to be self-occupied, then that maximum limit is applicable only if the property is self-occupied. That maximum limit is separately available to both of you. 2 lakh limit is available to you and 2 lakh limit will be available to your father as well.
Right, so quick wrap over there, co-owners, only co-owners can get tax benefits if there are more than one person is actually buying a home over here, and you will get the tax benefit in the proportion that you are repaying the loan. We have Mrs. LR who's called in. Mrs. LR, go on, tell us what's your question.
Good evening, madam.
Good evening.
Madam, I will come under a 30% tax bracket from June 2016.
Okay.
Since I'll be changing my job from June 2016, what exactly are my avenues to claim for my income tax? I want to save my income tax by buying a house, going in for a home loan. Now, I'm worried about whether I'll be eligible for a housing loan. I'll be borrowing it from along with my husband, of course, but he already has 2 home loans on him. So I just want to know what exactly are my avenues.
Mrs. LR, you say that you fall under the 30% tax bracket. I don't see why any bank would not want to lend to you. Harsh, what are the tax benefits? Give Mrs. LR a lowdown on how, what constitutes eligibility for a home loan, and also if you could help her with what are the tax benefits that she can avail.
So, I think first of all, congratulations Mrs. LR, because you're moving up into the 30% tax bracket, which obviously means there is an increment that is happening that's taking you beyond that slab. the other issue about how home loan eligibility is calculated, it's very, very simple. I think the banks are going to look at the both of your incomes, your income as well as your husband's income. They will assume about 45 to 50% of that income is available to satisfy the EMIs of all loans. Now, to the extent that your husband is already paying EMIs on 2 home loans, out of that 50%, that much EMI is already preempted. Whatever balance EMI is left, how much loan can you take on that? I think that is how it will be calculated. It will be reverse calculated based on that. There is no limit. You can take as many loans as your income allows you to take. So I think there are no restrictions on that. A question though to you, Mrs. LR, is please look at what does a tax benefit do? A tax benefit reduces your cost of the loan. You still are making an investment by borrowing, although at a cheaper rate because of the tax benefit. Please do examine, since you seem to have already a great, this is not really a home loan question, but you already seem to have a lot of exposure to real estate. You should definitely examine whether you want to increase that exposure to real estate along with a loan. I think that is the real key, just because that loan is coming cheaper.
Right, so an increment also means that you need to be more responsible while financing, while planning your finances. So step back, sit and go through how you allocated your money and then take a call. But yes, Mrs. LR, you are eligible. With a 30% tax bracket, you are clearly eligible for a home loan. You can take it all by yourself. You don't even need to take it along with your husband, in fact. We have Priya D'Souza who sent in an email now. She says that she's taken a loan of 1.12 crore rupees from ICICI Bank. As of now, the bank has disbursed 22 lakh rupees of this loan. She wants to know that if she repays the disbursed amount, will it be considered as full closure or partial closure of the loan?
I think that depends on her. If she tells the bank that she is not going to draw any more money and she pays off whatever has already been drawn, then it can be treated as a full closure. If she continues to retain the right to draw on the balance, then it's a partial closure, but obviously there will be no more pre-EMI interest because she's already paid off whatever has been disbursed. So I think it really depends on her, what she wants to do. Does she want to treat it as a full closure or as a partial closure?
So essentially, Harsh, what you're saying is she needs to inform the bank over here. How does she do that? Does she have to send them something in writing or just, get in touch with your call center? How do you go about this?
So I think, you will have to talk to the bank either over the call center or go to the branch, or even when you're getting your statement, you would typically be getting statements. There would be contact details given there on whom you can contact. So best is to contact the call center, because to make the prepayment anyways you would need to contact the bank. And when you're contacting the bank, at that point of time, you let them know your choice, whether it is partial closure or full closure, and based on that they will ask you to write in an application and treat it accordingly. I am sure the bank wouldn't mind keeping it up, keeping the sanction open, and that really comes at zero cost to you. So I see no reason why you should turn it into a full closure.
Ideally the bank should not be charging you if you're going to repay your loan and close it.
The bank can't charge her. If it is a floating rate loan, there is no prepayment charge. So you don't have to worry about a prepayment charge.
So Priya, that is something that you need to keep in mind. According to RBI regulations, no bank can charge you if you want to repay your loan, especially if you've taken a loan on a floating rate. We'll take Dimpy's question now. She's written on our website, www.mpnow.in. Dimpy wants to know if it is mandatory for co-owners of a flat to be co-applicants for a home loan. Harsh, you already answered this, but let's just repeat it for Dimpy's benefit.
So I think obviously, as you said, I have answered it. Let me give the reason why it is necessary. So suppose there are, say, two brothers who are owners of a flat. Based on one brother's income itself, it is possible to give a loan, right? Yet the bank will insist that both brothers be co-borrowers. The reason is simple. If a co-owner is not a co-borrower, he can object when the bank proceeds against the security of the house. After all, the co-owner has a right in the house, just like the other person who's taken a loan. So unless he himself, all co-borrowers are deemed to be equally responsible for the loan repayment, no matter what the internal arrangement between the two of them
So
is.
essentially what you're saying here, Harsh, is that the bank is safeguarding its own rights over here by ensuring that you are a co-owner in the flat if you're a co-borrower.
Reverse.
sorry,
So
yeah,
you have to be a
you have to be a
co-borrower if you
co-borrower
are a
if you're a
co-owner.
co-owner.
You can be a co-borrower without being a co-owner, because I mean that's fine with the bank.
Okay,
But if you are an owner, even a nominal owner, you have
So
to
even
be,
if you don't want to take that home loan, you have to take it. That's what they're saying.
if you are a co-owner, yes.
If you're say there are two brothers, like you said, to take your example forward,
Right.
and both of them have bought a house together,
Right.
then the bank would expect that if the elder one is taking a loan, the younger one also has to be a co-applicant in that loan.
So in terms of the servicing, the elder brother may continue to do the servicing and the younger brother may not. But if the elder brother defaults, both of them are equally responsible.
Right. This is so that the bank can actually recover the loan in case both the brothers default on the loan.
That's right.
Okay. Dippy, hope that answers your question. Ashish has now sent in a question through email. He says, if I take a loan from a bank and if I'll take a loan from a housing finance company, what is the difference if I'm getting a loan at the same rate of interest? How will my floating rate depend upon RBI guidelines? What is better, bank or a housing finance company? First of all, I mean, this is a very basic question. Go with the bank or go with the housing finance company. Also, Harsh, if you could just add on to this. Now, my experience has been that typically housing finance company loans come at a little higher rate of interest because they get their money from the banks or from other sources, right? Correct me if I'm wrong.
Not necessarily true. So if you look at the larger housing finance companies, I mean, if you look at HDFC, or if you
I'm
look
not talking
at
about HDFC here. I'm
Right.
talking about the
So, I mean,
larger.
HDFC is
the larger
also an
universe.
housing finance,
Exactly,
although
but
a lot of people
yeah.
don't know it because they confuse it with the bank. But HDFC is the largest housing
But
finance
the larger
company.
universe besides HDFC, if we look
Maybe
at it
even
that
an
way.
LIC housing finance. So if you remove, say, an HDFC or an LIC housing finance, then yes, what you're saying is right, because their source of finance is more expensive than a bank. They're likely to be a little more expensive than the bank. That's one thing. But I think the question that has been raised is whether, if the rates are the same, which one should you prefer? So I think a quick primer into who regulates whom. The banks who do housing finance are regulated by Reserve Bank of India. The housing finance companies, whether it is HDFC, LIC Housing Finance, Diwan Housing, or a whole host of housing finance companies, they are regulated by the National Housing Bank. Now, the regulations are similar but not the same. In terms of its impact on floating rates and how they move, I think the regulations of Reserve Bank of India are a shade more transparent than that of the National Housing Bank. Also, you get access to the banking ombudsman, which is a fairly efficacious, a very effective grievance redressal mechanism when you borrow from a bank.
Also, I'll bring you back to what you said about floating rate loans. Now, when RBI reduces rates,
Right.
who reacts first, the bank or the housing finance company? Where do home loans become cheaper first?
First of all, I think let me remove this misnomer. When it is not that there is an automatic link,
It is, yeah.
that if RBI reduces the repo rate or the reverse repo rate today, then immediately within 24 hours, 48 hours, rates will reduce. Of course, RBI's repo rate and reverse repo rates have a huge impact on interest rates generally, but it is not a one-on-one impact. So each bank or each housing finance company decides its own rates. Having said that, obviously, as I said, the regulations, and now new regulations as far as banks are going to be concerned, are going to start from 1st of April, that's just 14 days away. After that starts, the chances that a bank will have to react faster, okay, will increase that much more. That is what it appears today. We'll have to see how it is implemented. Even as things stand today, as I mentioned, the rules and regulations surrounding floating rates are definitely more transparent as far as banks are concerned versus the housing finance companies are concerned. So, other things remaining the same. Okay, if only rate and how floating rates move is your criteria, then clearly banks are preferable over housing finance companies.
So if floating rates move, then that's a choice that you should probably be making. However, do see what is the kind of deal that the bank or the housing finance company in question is offering you. Who is offering you better rates, and who has a better track record as far as passing on rate cuts, etc. is concerned, and then make your decision on where to take your home loan from. We have Manav Puri, who's written in through our website. Manav says he's borrowed 36 lakh rupees from a bank as a home loan. The interest that is being charged is 10% per annum, which is higher than the prevailing rate. Now he wants to know whether he should switch the loan to another bank that is offering a lower rate. Manav, however, doesn't tell us whether when did he take this home loan. I mean, whether he's in the initial part or the later part of the home loan. What would you suggest he does? Harsh?
I mean, why not, Manav? I mean, why would you not shift to a lower rate? I mean, the only reason you might not shift is nowadays the only cost of shifting, okay, is the mortgage fee that you might have to pay. If your loan amount is small, there could be a processing fee. Otherwise, I think most banks are perfectly willing to waive the processing fee for large value, good quality customers. So you have a small fee, you have considerable amount of admin work. The only reason you will not shift is if the loan amount is small, which means the whole admin effort that you do is just not worth it. If the loan amount is large, then irrespective of whether you are in the beginning of your loan or in the end of your in the second half of your loan, I think you should definitely shift. Please remember the advice we gave you. It might be better by paying some 0.29% to your existing lender if he is willing to give you the same rate that the new lender is willing to give you, because that saves you a whole lot of administrative hassle.
So first go approach your own bank, approach your lender, tell them that you are planning to move your home loan for the simple reason that somebody else is offering you a better deal, lower rates of interest. See what they offer you. If they are willing to match the rate of interest that the other lender is giving you, it probably makes sense for you to stick with your current lender. With that, it's a wrap on this edition of Property Hotline. Harsh Roongta, thank you very much for coming in.
Thank you.
If you have any suggestions, feedback, or any questions that you would want to ask, do get in touch with us. We do not only answer home finance questions or buying, selling, or investing in real estate questions. We will also answer questions relating to taxes on property. We'll also answer all your legal issues on Property Hotline. So do send in your questions on email, Facebook, on our website, through Twitter, or simply call us live like all the other callers you saw tonight. Thank you very much for watching Property Hotline. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/MagicBricksNow. And don't forget to click the like button. You can also follow us on Twitter at MagicBricksNow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/MagicBricksNow.